Governor Macklem, your speech noted a larger than expected rebound in household spending, and I think you attributed that to pent-up demand. Is there a risk that this will reverse itself as fiscal programs wind down, mortgage deferrals end, and the longer recuperation phase that the bank has talked about gets underway? And to what extent are you worried about what that might mean for housing markets?
Yes, Kim. As you've highlighted, and as we underscored in our press release, the rebound in the reopening phase has been a little bit stronger than we expected. That's encouraging. It has been uneven, though. It's been particularly focused on goods, durables, housing in particular. Services that involve close contact have generally been recovering more slowly. With respect to housing, as we highlighted, we do think a lot of this has to do with pent-up demand, or in other words, it was pretty difficult to buy a house during the containment phase. So this is a bit of catch-up from the containment phase, and we're seeing a burst of catch-up or pent-up demand is being released. We do expect the pace of housing activity growth to moderate going forward. As this pent-up demand gets worked off, uncertainty, household confidence, consumer confidence, it's off the bottom, but it's still not strong. Immigration is, for obvious reasons, lower during the pandemic. So there are some, and as I talked about in quite a lot of detail in the speech, youth have been particularly affected by this recession. So the pace of household formation is likely to slow. So for all those reasons, we would expect housing activity to moderate somewhat going forward. And this is really part of the broader recuperation phase. Overall, we think the economy is going to be moving in the right direction, but as we move from reopening to recuperation, the pace is going to slow and it's going to get a little choppier.
Next question is from Julie Gordon of Reuters, and Julie will be followed by Émilie Bergeron, the QMI, and Dave Parkinson from the Globe and Mail. Julie, go ahead.
Hi, Governor. Thanks for taking the question. So I'm just going to push you back on housing again. As I'm sure you're aware, that's one area of the economy that's been on fire since the pandemic. Are you concerned that the bank's contributing to another bubble? And at what point do financial stability risks become more of a concern?
So, well, let me just reiterate, we think a considerable amount of this strong rebound in housing activity reflects pent-up demand. So we expect that we're not extrapolating going forward from these recent numbers. With respect to vulnerabilities related to high household indebtedness and housing, a couple of things. As I said, we think a lot of this boost is pent-up demand. Secondly, if you look at household credit growth, it's really quite modest. And if you look more broadly at income and savings and consumption, incomes have been reasonably well sustained. Consumption has slowed, and so savings overall in the economy has gone up. That's helpful in reducing vulnerabilities. Having said that, we've been very clear at the Bank of Canada. We've underlined the vulnerabilities caused by high household indebtedness and too much reliance on the housing sector. Those have not entirely gone away, but when you look at our policy response, the best predictor of whether somebody is going to repay their mortgage is whether they have a job. And that really speaks to the importance of supporting the recovery, getting people back to work. That will help us achieve our inflation target. It will also improve the stability of the financial system.